Hello, everyone, and welcome to today's live event, Executing on Multi-Asset Strategies in Latin America. The conversation will be guided by industry expert Paul Harris, and a live Q&A will follow the conversation, so you can submit questions on the right-hand side of your screen. Please keep them more macro and on the discussion at hand. As I told Paul prior to the event, that we will ensure company-specific questions will be followed up with their respective management teams after the event. Just as a reminder, this event will be recorded and available on Six.com in the coming days. So with that being said, why don't you kick it off for us, Paul?
Thank you, Carl. Hello, my name's Paul Harris. I'm the Americas editor at Mining Journal. Joining me here today in the gold corner, we have Doug Ramshaw, president of Minera Alamos. And in the copper corner, we have John Black, CEO of Aldebaran Resources and Regulus Resources. Good afternoon, gentlemen.
Hello, Paul. How are you doing?
Very well, thank you. Hi, Doug.
Hey, Paul. Good to see you again.
Okay, let's start with an easy one. Who are you and what do you do? Doug, you go first, please.
Doug Ramshaw, president of Minera Alamos, that is looking at a multi-mine strategy currently in Mexico as our base of operations.
Thanks, Doug. And John Black?
Yeah, I'm I'm CEO of Aldebaran Resources and Regulus Resources. So we're pursuing a multi-asset strategy, but doing it by the same management team managing two separate companies, each of which have their hands on very large copper or copper gold assets.
Okay, so we've got two very different strategies being showcased here today. John, you have perhaps a more traditional exploration approach of finding something good and selling it on to a larger company. You did this successfully in the past with Antares Minerals and the Hikira project in Peru in 2010, 2011. This time around, however, with Regulus Resources, in 2008, you spun out the Argentina assets of Regulus into Aldebaran. Talk us through that and why you decided to separate the assets.
Yeah, absolutely. So as you mentioned, our strategy is to leverage off our experience and our contacts in South America. And we purposely look for projects that have potential to be very large copper or copper gold deposits, the type of project that if it comes to fruition the way we envision it, it will be large enough and economically robust enough that a major mining company would like to acquire it. That was our strategy when we set up. Each junior company needs to kind of pick their lane and determine what benefits they have, what experience they have, and where they can best go forward. We embarked on this with Antares Minerals, which we made a nice discovery. We drilled out and we sold the first quantum minerals. From that, we spun out Regulus on some assets we had in Argentina, but we quickly identified another opportunity in Peru again. So right now, Regulus focuses on the Antacore copper gold project in northern Peru in Cajamarca. I don't think our intent was ever to run two companies at the same time. But the type of assets that we look for are becoming increasingly scarce and difficult to find. We're not the only group that has this type of a strategy. If you look at Ross Beatty's Lumina Copper Group or the Lundin family or Richard Wark, there are a number of groups that operate with the same style. And in most cases, what we're doing is we're identifying projects that have been known, just not fully realized what their potential is. But we're somewhat cleaning the cupboards of those. And one of our major shareholders, a fund out of San Francisco called Route One, who is very happy with how we operate and what we did with our first company, always encouraged us that if we saw another one to put our hands on it. So when the opportunity came up to put our hands on the Altar project in Argentina, we made the determination that the best way for us to do that was to split the company into two companies. Some investors at that time were pretty adverse to investing in Argentina and preferred we stay in Peru. Some like both countries, some prefer Argentina. So this allows our shareholders to pick which or both that they want to go forward.
Well, thank you, John. There's going to be, I'm going to ask you a bit later on in the conversation, ask you both about Latin America. And I think it's interesting what you say, how some people, some investors prefer one country, but not another. But we'll get to that a little bit later on. Doug, the strategy of Minera Alamos has been to develop small gold mines in Mexico and bootstrap upwards into bigger projects and so grow into becoming a larger gold producer. That's more of an Australian approach to things in some ways. And the theory is that the cash flow can fund exploration and development, which is ultimately less diluted for shareholders. That's my sort of summary of your strategy, but give me your version, please.
Yeah, no, absolutely. Certainly our first project, Santana, is kind of a classical Australian bootstrap approach, one that the team had done very successfully at Castle Gold. which was a 25,000 ounce a year operation that was heading to 75 before Argonaut bought them out, and they took it to over 100,000 ounces a year. So very much the case with Santana. Get something up and running. Hasn't been as smooth as we would like, but I think operationally it can get to where we want it to be. And then follow it with what I would consider more conventional builds. So the next mine we want to build next year is out the gate a 60,000 ounce a year operation. Again, focused on very low capital intensity for building it. But yeah, much more conventional. It's not to say it can't get bigger, and we always look at projects that maybe have a base production level, but through ongoing exploration can grow. Yeah, we want to fund that exploration though as much as possible organically, and then a sequence of these mines being built, I think, is very insulated from inflationary pressures in the space compared with trying to build that production profile out of one big mine. We've seen a lot of those that have suffered major cost overruns. Project like Cerro de Oro next year is one we could build 5 times over just for the capex overrun of some developer peers building something bigger in Canada. And I think it was always a smart business plan, and I think smarter now because of kind of the macro background we're facing. And then, you know, for us, I've always said that it's a de-risking thing to have 2 mines up and running for sure. So it will be nice when we can get to that point next year. But it will also be a de-risking point when we can have multi-jurisdictions as well. We like Mexico because of the geology, because of the permitting environment, because of typically the cost structure down there. But I think the goal will always, once we built the foundation in Mexico, look to add a second jurisdiction as well, because it's just an important de-risking step with a multi-asset strategy when you're actually looking to build as opposed to necessarily sell.
Thank you, Doug. Thank you, John. Now, you've both got very clear strategies, but I guess the question is, do your respective strategies put you in an attractive niche in relation to the Canadian markets, or perhaps they cause you to be overlooked? Doug, maybe I can direct that to you first.
Oh, I mean, if our first mine had gone a little smoother in terms of its startup, I think right now we would have been in a very good spot. I think we could have been showing very nice outperformance against the sector as opposed to trading with the tape, or in fact, you know, worse than the tape earlier in the year when we had some operational challenges. But you know, I guess as a mine developer, and I view us more as a mine developer than a gold producer right now. You know, the plan is to bring multiple. We're always going to be a gold developer. We're always going to be developing the next mine. I guess there is a bit of a niche. I've said in many a time over the last few years that I wish we had more companies that actually wanted to build. I used to say that the biggest challenges facing the mining sector, if you were a mine builder, was water management and permitting. Now I think you could add to it skilled labor as well. So I wish that there were more teams building mines. I think we should be a sector which has, you know, more people actually wanting to build the real business as opposed to hopefully getting lucky as so many companies focus on the front end of the Lassonde curve. But I understand it comes with its own challenges as well. So I think, yeah, we are in a bit of a niche because we're an emerging gold producer. I think we will truly only emerge as a gold producer next year with our second bigger gold mine. And there are very few companies in that space to choose from. So we want to demonstrate us as being one of the better choices in that small area of the sector.
Well, thank you, Doug. John Black, what about you? Being a copper explorer in this day and age does, I guess, automatically put you into quite a niche.
It does, and in the style of work that we do, there are plenty of examples of of success with other companies or our success with our first company as well. And so that establishes a credibility. But I would say one of the bigger challenges we face are really twofold. One is that the business model we have requires a lot of drilling to move things forward. So that requires that we raise a lot of capital, and that can be quite challenging at times in the market. And it also it takes a while for the projects to mature. And so keeping shareholders' interest during that period of time as the markets go through gyrations becomes quite interesting. Ourselves as principals in the company and significant shareholders, and most of our shareholder base is really focusing on that end game, that we find the right project and that project will be monetized for very good benefit for all of us. But sometimes the ride along the way is a little bit difficult to keep interest. The retail market really establishes what our market cap is and what our share price is. And that sometimes is a little bit different than what we see as value in the project itself. So we can go through times where we're quite disconnected from what we think is a fair price on the project, and that can be a challenge for us to negotiate how you capture lightning right at the end as we deliver a project that's really good. Ideally, you're doing it when the major companies are hunting for these and going forward. And that's what I really like about how the copper market's setting up right now. I think in the next year or two, we're going to see increased interest by major companies. We're already seeing it, but we will see increased interest by major companies to acquire these type of assets. And I think we'll be delivering a couple good ones right on time here.
Well, thank you, John. Now let's talk a little bit more about markets. And I take on board your point about the long time horizons for exploration and development. And indeed, Mark Bristow today, the CEO of Barrick Gold, criticized a lot of institutional investors for having short-term investment horizons. Now, with the companies we've got here, Doug, Alamos is down about 30% since the start of the year. John, Regulus is down 15%. Aldebaran is bucking the trend. It's up 20%. How would you? But let me sort of clarify a little bit more. The daily traded volumes are not very good at all. Regulus under 20,000 shares. Aldebaran under 30,000 shares. Alamos, you're trading over 250,000 shares, so a little bit better. How do you guys? What do you think of the markets, and how do you evaluate your performance this year within that context? John, let me start with you, please.
Well, that's quite the challenge on this, and a lot of it, in our case, between the two companies. We'll start with Aldebaran. We've been delivering good results. Last field season we drilled with 4 rigs, so we had a lot of drilling coming out with some very nice long runs, and that put us in a good position to be delivering information to the market in a pretty steady news flow. We also benefited that Argentina is emerging as a much more attractive place for mining investment right now. And people are becoming more aware of that and more comfortable with that. And so the share price we've seen on Aldebaran is benefiting from that, where we've had a nice steady climb up. We still think we're long. There's a big disconnect between our value and what we see as the end value on it, but we're moving positively in the right direction. With Regulus, it's a slightly different challenge in that we have the deposit largely drilled out, and what we own is a significant portion of a much larger deposit that occurs across the property boundary onto our neighbor's ground. And collectively, between the two properties, we're wishing we can someday show the full size of this, because it'll be a pretty spectacular deposit. And now we're into a situation where we're really kind of working the cat and mouse game on how we position ourselves to have an eventual consolidation of the district, and that's what will unlock it. So that requires more patience, and we know that a lot of people get a little nervous during that period of time and chase the hot stories elsewhere. And I don't fault people for that. It makes sense, but it's good to remember what we have on hand and make sure you get back to the square before things take off. Thank you, John.
Doug Ramshaw, same question for you, please.
Yeah, I mean, you're right about volume. I mean, the one thing I'd say is in a gold tape or a resource tape, let's call it, like the one we're facing, it is the most marginal of sellers that actually can dictate price movements on a given day. There's not much you can do to, in terms of other than execute to address their concerns so that there may be a marginal holders of the stock to give you the time. I mean, these kinds of markets test the patience of even the most patient shareholders, I think, regardless of where you are in the sector and in the cycle. So I know that to some extent, we are in control of our own destiny here. If we improve some operational operations in the second half of the year relative to a weak first half, then we should recapture some of that lost ground, or reward the patience of those people that have held onto the stock. But in reality, when I look at 450 million shares out, the vast majority of those shareholders are trusting the process. They're not liking it. I don't like it. I'm a very big shareholder of the company. I feel their pain. But they are trusting the process. They're trusting the business model. And we need to, whether it's drilling some new discovery, and getting lucky with the drill bit, or in our case, developing and building mines. It's all about execution. It's all about what comes out of that drill hole. And there's not, the day-to-day stuff, which sometimes I've been guilty of let overwhelm me. I realize that my efforts, my energy is best focused on executing at the fundamental business level, which sometimes there is a difference between our perception of that value in the markets, and there's not much you can do to close that gap. But if you can continue to execute well and reinforce why your shareholders have supported the stock and the company and its vision, I think you can close that gap over time. So, but it is a tough market, and I think when you properly align with shareholders, you also align your mindset to just how tough it is. When you've got real hard cash like they have in your company, it's you see pain on your brokerage statements like they do too, and you don't like it, and that if you're not liking it, they certainly aren't liking it. So sometimes I think life would be a lot easier if I was just staking lithium pegmatites off a Google Earth image. But I think the reward professionally and hopefully financially for our shareholders in executing and building a real company in this space is a reward and a prize worth some of the short-term pain.
Thank you, Doug. I think a lot of people forget or overlook the fact that perhaps the most valuable tool in the investor's tool bag is patience. Exploration takes time, developments take time, and market hypothesis takes time to come to fruition. And when markets move, they can move very, very quickly. And if you're not positioned, you're not going to pick up on that. So let's look ahead about potential breakout for each of you. Doug, as you mentioned, you're producing at Santana, and you have the funding already arranged for the Cerro de Oro development. So you're somewhat insulated from the market price and share price fluctuations, as you don't need to raise equity. What do you really think is holding back the Minera Alamos stock? What do you think investors want to see for breakout to occur? And what are you doing to address that?
Look, I've said for the longest time that our number one asset is our operating team. They are really good mine builders. There were a lot of challenges faced with building Santana, which was a small starting mine, a mine that cost us $10 million to build, a mine that we built in the middle of a pandemic, and one that, following the pandemic was a significant drought, which meant we didn't push the accelerator on our production rate at a time where, I think the market wanted it. But it was a $10 million mine. And everyone's focus is on Santana because it's the first one of our suite of operations that is producing some gold. But in reality, if you own the stock because of what Santana, a $10 million mine, is doing, and not holding because of our ability to bring on a sequence of these and bigger mines thereafter, I don't know. I mean, I get the focus on Santana. And so in the short term, we have to show an inflection point there, which I think we'll be doing in the second half of this year, that things are picking up again at Santana. Thereafter, it's a little like virtually all developers. It's a bit of a permitting story for Cerro de Oro next year, which is a huge game changer for the company. And I can't control that permitting timeline. We're still pretty confident we will have those permits back before everything breaks for the federal election next year. The one thing I could control was showing that we had a funding package in place for it. It's a low capex mine, sub 30 million US for this 60,000 ounce, sub 900 ASIC gold mine. And I could control that. So it's with the lawyers right now, but all the paperwork for a funding package we announced end of May is just being wrapped up, which hopefully should give some comfort to our shareholders. A backer wants to endorse that project and that team, but more importantly, on the day we receive those permits, there's not going to be that, euphoric, yeah, we got permits, only to be sideswiped by us having to do some equity raise because we hadn't thought ahead as to how we were then going to build this low capex mine. So short-term operations have to turn around at Santana. Longer term, the future of this company is Cerro de Oro and our other permitted project, La Fortuna, which are far bigger, better projects than Santana. And it's up to us to, in the short term, while people are focusing on Santana, to show that it can grow in size and be a better operation. When we were producing in the first 3 quarters of last year, we were producing at sub 1,000 ASIC there. The project works. We just haven't ramped up the production as quickly as we'd like. So it's not that it's a broken project from a point of view of metallurgy or anything like that. The project produces a lot of very high margin ounces. We just need to be producing more of them. So that's short term, and then longer term, or even still short term, Cerro de Oro permitting. And we can construct that mine in about 6 months. So we should see a second gold mine producing its first gold before the end of next year, all being well.
Thank you, Doug. Some good catalysts coming up in the next 6 to 12 months, hopefully. John Black, you've brought partners in to help address the funding issue, and some big partners at that, in the shape of Rio Tinto, for example, in what is shaping up to be a hot market for copper. However, the share price of Regulus has stagnated, while Aldebaran hasn't been able to break out over the $1 per share. Same question for you. What do you think is holding back the companies? What do you think investors want to see for them to break out? And what are you doing to address that?
Okay, we can talk about a few topics that apply to both companies, since we have a similar strategy in each company, and then we can be more specific on each particular company as well. If we start at kind of the macro and take a look at the copper space right now, one thing that we're consistently hearing as we market the companies and we talk to shareholders is that there's a good recognition that copper is critical to any manner that you envision that will move towards a less carbon intensive economy, a green economy moving forward. You can debate about which metal is best for which type of battery, and play the hot story there on it. But in the end, to transmit all of that electricity, you need copper. And I think one of the real shocking stats that's out there right now is one that Robert Friedland happily puts out there pretty commonly, is that if you take a look at all the copper we've used throughout history until today, we'll need that much more copper again in the next 22 years if we meet these stated objectives that all countries have signed up to move forward to. That's going to be a tremendous challenge. I really think that what will slow down the effort to move towards a more green economy will actually be a scarcity of metal, or better put, a price increase to the metal, because as an industry, it'll be a challenge for us to deliver that much metal quickly enough. So the copper space is very good. When we talk to people are very comfortable with that. However, there's a hesitancy right at the moment, and that's primarily related to concerns about global economy at the moment. We've seen rate hikes go up, and it's very unclear how much longer that happens. Will it tip over to the point of causing global recession? In some people's mind, there might be a better opportunity coming up if markets were to collapse and come in, or there just may be a timing issue and they want to wait a little bit on it. So good recognition that 1 or 2 years out, things will probably be fantastic for copper, but it may be a little choppy in between. So I think we need to get through that I'm not an economist. I don't have a crystal ball on this, but I would suggest that that's probably another year of uncertainty on it. We are beginning to see groups position themselves in the copper space right now ahead of this. The contrarian type shareholders that are picking up substantial positions in companies, quietly picking away and positioning themselves well for what I think is a fairly smart bet going forward on that. But it'll really take the general market moving in that direction. We've seen recently some interesting shifts in some of the talking heads that are at conferences. For a long time, they were pushing really hard on lithium or uranium, and both of those have gone through big booms. Both of them related to the same green economy type sector, and those have maybe played out a little bit in some cases. And we're starting to see the beginning signs of people starting to promote pushing for establishing copper positions. So when we see a more general acceptance in the market that copper is a space to be in, I think that will see people moving in. And once, particularly people know it's a good idea, but then they don't move on it because no one else is, and then they see it moving, then we tend to see major shifts into a space. And that's something that's just a characteristic of resource investment in this. We're well known for extreme swings and highs and lows and a lot of volatility in the market, and that's what that creates. Another sort of major catalyst that would benefit both companies on this is that each company has a very interesting asset, but there are a number of other companies that have similar assets out there. So we have a peer group of maybe 15 or 20 copper deposits out there that are in the hands of junior companies, and therefore logically available for a major company to purchase. We've seen the major companies in the copper space begin to have a lot of M&A activity, but it's predictably acquiring producing assets. It's merging with another producing company. It's tidying up a district to have full ownership of a district, and that's logical because that early stage M&A, you're trying to go for production immediately. In the pattern I've seen, I guess with my age, it's been quite a few cycles I've been through here on this, but you often see that on the leading edge of M&A. And then as you move into more mature M&A, you'll see companies begin to go after the product or the assets that are ready for development. And so that's what hello, Paul, can you hear me?
Yeah.
Okay, I didn't know if I cut out there. So that's what we believe will be a major trigger, is that if we see companies acquire similar assets to what we have, then that'll produce even more scarcity, and it tends to create a rush. We last saw this in the period of 2006 to 2011. That's when we sold our first company, and it was quite a rush. I think we're setting ourselves up for that. Now, more specifically with Aldebaran, the catalysts that we have coming up on Aldebaran are we'll be able to see as we need one more good field season to drill out the full size of the deposit. We already have a very large deposit, but last year we got some geophysical data in that suggested the two principal zones actually are unified at depth. So we refer to a new Altar United concept of combining the zones. We partially drilled that out this field season. We'll go back in and begin drilling in October. We'll need a full season to fully drill that out. And so in the next 18 months, you'll see us put out an indication of the full size of the deposit, and more importantly, a PEA, the first look at the economic parameters around the project. At the same time, we'll be making enough expenditures that we will earn into 80% of the project, which is our objective. Our agreement allows us to earn into an 80% from Sibanye-Stillwater, the group that held the project. So those are really key catalysts coming up in the next 12 to 18 months. Full definition of the resource size, a PEA wrapped around that, conclusion of our earn-in to go. And important to note, the financing that we just announced gives us enough money to make it to that point where we've earned in. So those are all very major catalysts for Aldebaran. And I think some of those are eye-openers. Sometimes continued drill results, people get a bit numb. But when you go through a major update on a resource, or more importantly, a PEA, that's what really opens people's eyes to the potential. With Regulus, as I mentioned, we're in a situation where we really have our portion of the deposit pretty well drilled out. On that, we can continue to add additional mineralization on it. But what we're really looking there is a catalyst that allows us to announce some type of a consolidation of the district and a pathway forward on it. And one of the key things I can point to there is earlier this year, we had Rio Tinto Newton come in as a major shareholder for Regulus. And they've come in partly to test their Newton technology, which is technology that it, allows for the leaching of primary copper sulfides. There was some really interesting potential benefits from that. And also because they are intrigued by the overall size of the project. We get a lot of inquiries from companies right now just due to the nature. Companies can see what the combined project looks like, and they're very, very keen on it. The key thing is, how do you unlock that potential and make it available for major companies to come in on? The Newton technology is pretty fascinating because it allows leaching of primary sulfides. It liberates arsenic. One challenge we have in that project is there's a fair amount of arsenic with it. And we either pay penalties to a smelter for it, or we go the more expensive route of an autoclave on it, or Newton technology has the potential to allow us to heap leach this material and sequester the arsenic into scordite, which stores it safely. So if this works, it'll be a system that uses way less water, way less capex to it, strongly improves the project economics and the flexibility of the footprint of the project. It'll take us about 1 year to get the column leach results from that project. And when those come out, I hope to be in a position to be able to talk about the full potential of the project at that time.
Well, thank you, John. Sounds like you've got, for both Regulus and Aldebaran, some more good catalysts over the next 6 to 12 months. And I think the market has been responding to what it sees as good drill results or discoveries, particularly in the copper space. Aston Bay recently, Decade Resources recently, and also in the gold space as well. Of course, we are in the summer. For some, it's the summer doldrums, a lot of people on vacation. And this is traditionally a quiet part of the year, quiet time of the year for the markets and share prices and what have you. Fall is just around the corner, 3 or 4 weeks away now. To what extent do you guys get a feel that September's going to hit with renewed energy, renewed focus, a bit more vigor? John, let's start with you.
Well, it has been really one of the more quiet mid-years that we've seen in quite some time on this. And I think it's a combination of people wanting to do other things, a little uncertainty in the market, and people just wanting to travel and take off and take some time to do other things. And so it has made it fairly quiet. It's made it difficult to raise money in our sector, and I'm sure we'll talk about that a little bit more as we continue this conversation. But we're anticipating, as we get back into fall and get back into the groove of things, and particularly kind of the conference circuit, that we'll likely start to see more interest in the sector moving forward. We're in a fortunate position that we're cashed up in both companies, so we're not looking for additional funds on that. But we would certainly like to be able to get a better response to the information we already have in hand, as well as what we can put out. So very anxiously awaiting to see what the autumn brings to it, the North American autumn brings to us, and see where things take off.
Thank you, John. Doug Ramshaw.
Yeah, it's funny. Typically people just think summer is a quiet time. And I think as a result, a lot of companies, it's remarkable how the assay labs all seem to deliver the assay results after the summer months. Personally, if there's news that needs to be put out, there's probably only 2 weeks of the year that I wouldn't want to put news out, and that's around the Christmas and first few days of the new year. It's worth, I think back to when Gold Standard had their first heck of a hole at their project in Nevada. This is way back when. That hole I think they put out in July, late July, and the stock took off. The best in the last 3 or 4 years, the best market we had was May to September 2020. Yes, this is a more typical summer period, but I'm eager to have news out between now and the conference season. Because I want stuff to be talking about at those conferences, but also because I just don't think there's ever a bad time to be informing your shareholders. And maybe it's actually a benefit when you can be putting out stuff when the broader market at large is quiet or hoping. We always hope every year after first 7-8 months of a year like this one, that September or October have got to be better. And if they're not, oh my God, tax loss selling season, and it feels like it's a completely written off year. And I think this goes back to my point about, the broader market be damned. You've just got to be, if you execute, even if there's a disconnect in the marketplace, if you execute and you know that you're increasing the fundamental value of your story, that's what you should just drive forward to do. And I hope for the broader sector for encouraging people to come into this space as investors or money that's parked on the sidelines, awaiting some green shoots that are worthy to water, that we do have a reasonable September, October, because otherwise I think, so typically you get into tax loss selling season, which seems to, like Halloween decorations in Costco that seem to be, earlier and earlier every year. It feels like tax loss selling season is the same. It used to be a November, December phenomenon. Now it feels like if there aren't those green shoots in September, people are already thinking about cleaning up their portfolio. And then it becomes a bit of a self-fulfilling prophecy of just a continued weaker market going into year end. So, do you need to have an understanding of that tape? Yeah, I think if you're a company that needs to raise money, it becomes more important than companies like mine or John's, where we're typically looking for people that have an interesting, an ear to an interesting story, and what you want from them is some of their time to digest the story, not necessarily to be looking in their wallet for cash. It's a very, very tough. Last summer was a tough closed market, the bankers like to call it, from a financing point of view. I think this summer has been immeasurably worse than that, and you can kind of see it with a few rare exceptions. Typically, where the Lundin family have been backing some great successes and stories of that they've been supporters of. You haven't seen a lot of big financings done for companies. There's always that flurry at the beginning of the year, and talking to bankers, there's a lot of people that are just awaiting. Maybe they don't want to pay the first 20% recovery in some of these stocks, but they're waiting right now. And when you've got fresh capital waiting on the sidelines, it kind of lends itself to the marginal sellers losing patience, actually further putting pressure on the broader tapes. So, it will be interesting to see what September, October brings for the sector at large.
Thank you, Doug. I'd like to remind our audience that if you have any questions, please use the tool at the lower right-hand side of your screen. Let's follow up on that, if we may, Doug, talking about the finance. You said sort of capital's waiting on the sidelines. You guys are both in a relatively fortunate position. You don't need to raise equity at any time in the near future, at least, and maybe not for quite a while, if ever. What are some of the positives you see out there in terms of the financing or the ability to finance?
I
was going to say, how bad is it? But come on, let's try and put a positive spin on this.
No, I mean, I think the future is bright for a sector that it boggles my mind and not copper and gold company, not the gold sector, not copper company, but just generally the resource sector, whether it's iron ore or whatever, like the value of this sector, but for what it brings to the economy. I mean, maybe there is some risk of recessionary risk which are playing into people's minds or whatever, but I for good, well-run, mining companies or exploration companies, they are the pathway to the very metals which are going to dictate our degree of advancement as a society, whether it be, technological change in general, or technological change that can help with climate issues, or just the green economy. It all comes back to, ironically, digging big holes in the earth to fund a cleaner and better future. But that can be done very responsibly. I've been a resource investor for 30 years, and I will be till the end of my days, because I view the resources as important as people saying owning land. New land isn't being made anytime. Well, these resources were all made, millions and millions of years ago. They've just got to be found, and they've just got to be developed. But we need more discoveries. We need more mines being developed. Ultimately, I think the incentive price has to rise for a lot of these things to be developed, and that should be a source of encouragement for equity holders, whatever the commodity they're facing. And and we have still seen, sometimes it's on just some call pitches and descriptions of stuff being found, and you're seeing a lot of people playing kind of lottery ticket exploration results, hoping to have some success to make up for some of the bittersweet nature of being a resource investor in recent years. Or, I think some of the inflationary pressures which have put pressure on the big gold producers or the big, gold developers, are starting to dissipate. But again, I think the incentive price for the very production that's needed, whether it being gold or copper or anything, has to rise, and that should set up companies up very well that have good conservative inputs into their economic models, into their resource models. There are a lot of projects that are going to be ripe for development over recent years. We need teams like John's or teams like ours to be those teams that are either advancing them to a point where someone else takes them on or developing them themselves.
Thank you, Doug. I think a lot of the gold producers still have $1,300 per ounce or $1,400 per ounce as their reserve price, and most of those are only just squeaking under that level now. So in terms of price rises being necessary, I think you're very much on the ball there. John Black, what's your view on this?
Well, I think Doug covered many of the key points on this. A few other observations is that, unlike, say, 2008, 2009, when we went through the global financial crisis then, everyone realized that was a huge drop and that produced a great buying opportunity to go forward. But at that time, very few people had cash. A lot of people were pretty wiped out. And so no matter how attractive the buying opportunity was, there just wasn't an ability to go forward, and funds were getting redemptions, and it was pretty ugly. I sense in this market, just like Doug mentioned, is that there is a lot of cash on the sideline. This has been a little bit more of a gradual ease into the situation we're in right now. And a lot of people have been quietly tucking cash away and waiting for the opportunity. It's a question of when they deploy and when they go forward. So I think the right projects and the right movement overall in the sector will see that piling on effect pretty notably. Some other shoots of optimism that I see out there right now is that as particularly in our copper space that we work in and other battery metals, is there's beginning to be a realization that these are fundamental to the green revolution going forward. And we're seeing investors that traditionally would have not thought about mining industry at all interesting on this, realizing that perhaps mining is essential to move forward. So we're seeing younger investors, we're seeing investors that haven't particularly been in our space before, inquiring at least and wanting to learn more about it. So I think that's fundamental. We're an aging industry and an aging investor population in many ways. And so I think getting new investors in will be really critical to this as we move forward. And then finally, from our standpoint, in the space that we work in on this, I have almost two different crowds that I talk to in a typical day. If we're interacting with the major mining companies, who are both copper and gold, because our copper projects have significant precious metals associated with them, they're doing their job, and they're monitoring projects like what we have right now, and we sense the urgency that they have to move forward. And you can see it in a number of major companies have stated very clear goals to substantially increase their copper production. They see what's coming. They know what's there. They're the end users. They're the ones that will determine if they're acquiring projects like we have and putting them into production. And so that's very, very encouraging. When we're talking to retail shareholders right now, there's still kind of that show me that it's going to work, and I want to see it take off before I jump in. General acceptance that it's probably going to be a pretty good space to be in, and that copper is a good way to play the green revolution. But I think everybody doesn't want to be the first. They kind of want to see it go, and they may forego that first little bump if they can jump in. But in my experience, these things take off pretty fast when they go. So you don't want to be sleeping. You want to be positioned when they take off.
Thank you, John. Now let's turn our attention to one of the key words in the title of this webinar, and I'm referring to Latin America and your respective strategies regarding Latin America. The neoliberal construct of the global economy has been dinged in recent years, moving to a more adversarial international environment, more them and us, more xenophobic even, and the minerals sector has not escaped this. There's talk of Canada and the US being tier 1 jurisdictions, and the inference being that they are better places to invest in mineral exploration and development because of that. Now, Peru, Mexico, and Argentina have successfully developed many tier 1 mining projects. So my question for you guys is, what are the risks and the benefits of operating in Latin America or outside Canada and the US? John, let me pick up with you there.
Okay, that's a pretty big topic on here, but I can point out, particularly with respect to Argentina, what we're experiencing on this is that fundamentally the deposits are where the deposits are, and so you do have to give consideration to areas that have the deposits. The rocks have to be right first, and then you put on a layer of country risk and ability to be able to develop something if you find it moving forward. And so that is constantly changing and moving around, and you create opportunities where certain countries or certain jurisdictions within countries become much more favorable. And that's exactly what we're seeing in Argentina. Argentina has always had the right rocks. The geology is the other half of the Andes across the border from Chile. And so there's every reason to believe there should be large copper and gold deposits. There are lithium deposits, as we're seeing as well. They just haven't had the fiscal and government environment that permits investment, large foreign investment, and more importantly, repatriation of your profits if you do make that investment. And so they've kind of frozen that out. And it's not just in the metals sector; it's also been in oil and gas, and to some degree in agriculture as well. And they're universally at all political levels in Argentina right now, at national level and at provincial level within some certain provinces. And there's a recognition that there's a tremendous potential here that could be tapped, that would provide a good inflow of funds and good high-paying jobs to people moving forward. So it's kind of ironic, but Argentina's almost inadvertently preserved a heck of an opportunity for themselves by not having the most favorable conditions to make large investments for the last few decades. Things have been frozen in space. The type projects we're working on are large copper projects that have been known for some time. There are 6 or 7 major copper projects in Argentina right now that are showing all the characteristics they could become major mines moving forward. Frankly, if most of those were located in Chile, they'd already be large holes in the ground. And so they've created this situation right now where I think we'll see a boom in resource prices. We're seeing it in lithium already. I believe we will see that happen in copper. And Argentina is in a situation where they realize this is potential. So suddenly it's become one of the easier places for us to work worldwide. And they're taking a lot of steps to encourage us to be able to work quickly, responsibly, but move quickly on it, which is what's important for our shareholders going forward. So we very much embrace that right now and follow that. The real test will come now. They've created an environment where it's attractive for us to explore and define these projects. The real key thing will happen in the next year to see if they convince the major miners that they can make large investments and recover their capital. But we're already beginning to see that. In the lithium space, there have been some major acquisitions recently. And groups like BHP and Rio Tinto and South 32 have put sizable amounts of money into projects like ours and our neighbors moving forward. There's also quite a bit of movement into the oil and gas sector in the southern part of the country, where the Vaca Muerta field has got tremendous potential. So I think we're right on the cusp of seeing that turn. And as an investor, what I would watch for is if we see post-elections, we have presidential elections over the next couple of months. If we see post-election announcements that companies are going to go forward with major developments, I think that's going to be really the signal that the game's really on in Argentina moving forward. So that's an example of where a country that was unfavorable for a long time has now suddenly become much more favorable, with some cautions, of course, associated with that. So
thank you, John. Before I ask you about Peru, I think it's worth noting that just in the last couple of weeks, Glencore announced it's going to spend, I think it's 570 million to buy the other part of the Mara project in Catamarca that it doesn't already own. So that's one of the world's biggest diversified mining companies. They're putting more money into Argentina. Before I let you go on this, let's talk about Peru.
Okay, Peru is the way we view Peru is it's over the last 20 or 30 years I've been working in 30 or 40 years I've been working in South America. Peru has always presented to me, which is one of the best balances between potential to discover more mineralization, but an established mining industry. So there are some countries that arguably might have better potential. Argentina had better potential at one point in time, but it was very challenging to move a project forward. Peru's always had that nice balance. Other countries like Chile, it's difficult to get land and the exploration's more mature, probably more to be found. It's just harder and it's harder to move. It's really more for the big companies to work in those areas. So we've always, the history of our companies and my own exploration over the years has always gravitated towards Peru as a place where there's a very good chance to find something new. And if you find it, you can move it forward and develop it. Now, having said that, it's like many parts of the world, and I think you alluded to this, is that it's becoming increasingly difficult to move projects along quickly. Permitting's more cumbersome. There are more voices involved, and that's natural. There's better recognition of all the stakeholders that are involved. It's just sometimes countries are a little clumsy on how they put that permitting in place. It's with good intent, and we embrace the idea that we have strong regulations and good pathways to go forward, but sometimes it slows us down. And that's what Peru's been caught into, as well as some political turmoil with sudden shifts in direction of the country at the presidential level recently. But fundamentally, I take comfort that Peru will always be a mining country, and it's always going to be a good place to go forward. This past week, we've seen the Minister of Mines deliver on promises he made to us at the PDAC in March that they will make serious efforts to facilitate the permitting process and move that forward. He demonstrated this week with showing how a number of projects have been unlocked and moving forward. So long ways to go on that still, but in the end, to me, it's a country you need to be in if you're seriously exploring.
Thank you, John. Doug Ramshaw, in Mexico. Mexico's coming to the end or the last year of the AMLO presidency, and it's been quite a wild ride for the mining sector. What's your view on the risks and benefits of operating in Mexico?
Yeah, it's been wild in that there's been lots of headlines. I view most of it as noise, unhelpful noise, to be honest, because things are moving forward at Mexico. Sometimes at a slower pace, it depends. I think whether it's Mexico or anywhere else in South America, the importance of a team's experience operating in a country is so vital. It's not just about understanding the geology; it's understanding operating in that country. And you know, I've often said, like, Mexico's not going to become Venezuela. It has mining history at its heart. It has a political party right now that definitely says a lot of stuff, which, for example, open pit mining bans in Mexico. And yet the examples that keep getting trotted out under the previous administration were never going to be built because they were in environmentally sensitive areas or major indigenous pushback against them. But it keeps getting trotted out every 3 months like it's written in stone. And then you put against the backdrop of the current administration saying they won't give out mining permits, and yet have given out mining permits to companies such as ours, such as Orla's, such as Silvercrest, and two out of three of those were open pit mining bans. I mean, noticeable for all the headlines that open pit mining bans get in Mexico, that when they actually tabled a mining reform, there was no such specificity towards open pit mining bans. One of the times that article came out, you saw Agnico, a company very seasoned in operating in Mexico, invest heavily into the San Nicolas joint venture with Teck. I think it goes to show that those companies who really understand Mexico understand that it comes with the territory. You get a lot of noise. Last year, or was it 2 years ago, where there were fires in Chile, and it felt like half of South America was in a great state of unrest. Mexico wasn't really making any headlines. Maybe it's our turn now. And I think over the next year leading into those elections, there will be a lot more noise. But it's often that's what it is. You know, for all the stories you hear over the decades about resource nationalism, you never really see resources nationalized. But it makes for great headlines and great stories. There's not been a history of huge resource nationalism, despite all the topics of conversation that come up with it. So from a point of view of operating in Mexico, our team has been down there for 15 years. We're largely, I'm clearly not, but we're largely a team of Mexican nationals. We understand working in the country, and there are tremendous benefits. Largely the permitting process, which has remained unchanged since AMLO came into power, is a good one, and it is way quicker than operating in the US or in Canada. From a cost perspective, building open pit heap leaches in Mexico, we're close to $20 a square meter for heap leach pad. The same heap leach pad in Nevada would probably cost you 2.5 to 3 times that per square meter. So that's where our business model is grounded in this industry. You know, I looked at some charts the other day that were put together by bankers, almost industry-leading capital intensity for our production profiles of our project. That's good. That's good for our shareholders. If we can spend less to build the same mine in Mexico, yeah, we'll take it. And Mexico has tremendous rocks as well. So, you know, there is a side of me that, you know, we continue to look. It makes sense with our team in Mexico. We're looking for tuck-in type opportunities because I'd like to almost underscore how comfortable we are operating in Mexico by making sure that in time there's another asset that comes into Mexico. Our team's seen it all over the years. So AMLO, even if his party stays in power in the next elections, it's hard to imagine a larger than life populist type president than AMLO filling his shoes. And unfortunately, with populism, as we saw, you know, in the US, populism often isn't necessarily grounded in truth, but it doesn't need to necessarily be factually accurate. It just needs to be popular. And that, unfortunately, distorts the airwaves of what's really happening in people's minds. So, you know, we're very much comfortable with operating in Mexico, and will for a great many years, and probably a great number of administrations to come in the country.
Thank you, Doug. We have a question in which I'll direct to John. Lundin Mining is negotiating a fiscal stability agreement for its Jose Maria project. Is that at the federal level? Is that at provincial level? And to what extent or not will that set the tone for future contract negotiations? Sorry, fiscal stability negotiations.
Well, I'm obviously not privy to all the details of that, but it would have to be at both levels. Primarily the federal level to move forward, but also at the provincial level. As some listeners may not be aware, Argentina operates as a federation of states, so each province has a lot of autonomy to determine if they want mining, and if they do want mining, how it goes forward. It's very similar to, say, the US or Canada, whereas other countries like Peru and Chile are uniform in terms of how they apply things across the country. So San Juan province and as well as the federal level are both very receptive to, they're almost pushing us all right now to get projects on the books as quickly as possible. And but there needs to be some new ground broken particularly in terms of repatriation of profits and how you capitalize projects and move forward. And so we're eagerly watching several projects that are in front of us. So you mentioned Jose Maria with the Lundin family. We also have the first quantum up at Taka Taka, that's a project that's pretty well advanced. And then we have the Pachon project, and you mentioned the Mara project, both moving along pretty well as well. And all of those are very serious experienced international operators that are working on that, and I have quite a lot of confidence that they will establish good agreements moving forward. In theory, each company can set their own agreement, but there will be benchmarks set by the first groups that come in. So we're anxiously watching and rooting for these groups to strike good agreements that are good for the industry overall. And it's important to note that the Ministry of Mines, or the Secretary of Mines at the national level, is well aware of this opportunity. They're taking steps. She requested the formation of what's called the Mesa Redonda de Cobre. So it's the copper roundtable that all of us that are working in copper are representatives on that. And she's asking all of us to give our input on what do we need to see to have a stable environment to allow us to develop projects going forward. And it's sincerely asking us for this information and incorporating that into current federal policies. And all three major parties that are the potential candidates for the presidency coming up have all expressed interest in learning more from our copper group going forward. So there's good interaction back and forth. There are good international guidelines on this. Argentina tends to make things complicated sometimes. I'm sure there'll be some adventure as we get to that point, but we're very much watching some of our peers that are in front of us to see what they establish as a benchmark for the rest of us.
Thank you, John. Now, we're pretty much out of time, so I'll close with one question. Short answers, please, gentlemen. Experience is a great teacher. In hindsight, what is one thing you wish you would have done differently at your current company? And John Black, let me start with you.
I think the short answer is go faster. It just look for ways that we can move projects more quickly. We always set out a timeline, and it always takes us longer to get it done for any of a variety of reasons. So look for those steps that you can move things along more quickly. Don't turn down cash if it's available, and keep focused on moving projects more quickly.
Thank you, John. And Doug Ramshaw?
Not build a mine in the middle of a pandemic ahead of a drought. No, we've always tried to do things. We have a clean balance sheet. It's never been the strongest. That's likely not going to change. But what it means is you sometimes can't push the accelerator as quickly as you would want, or perhaps even if as operators efficiently. When we merged our companies in 2018, there was no raise associated with it. We've rarely gone to the market in the last 5-6 years. Now, that's admirable from the point of view of protecting our shareholders from dilution, but sometimes I almost think 4 or 5 years ago, we should have kowtowed to Bay Street, done some big raise, brought in a whole bunch of backers into the deal, and allowed my operating team to focus fully on executing as efficiently as possible, where you're not trying to do things in a very shareholder-friendly way on limited budgets. But in many ways, you then test the patience of those shareholders, because time still has a cost associated with it. But I'm still proud of our approach and how we've gone about this. And I don't think I would second guess that approach. But if I was living an alternative life, I wonder if things would be any different in that regard. It's amazing how, when you've aligned properly with your own money, how sensitive you are to the very dilution that is so often, the refrain of a retail shareholder. But aligning properly with them, you become just as aware of the importance of dilution as they are, obviously making their investments. And you don't necessarily win trophies for doing it, but it's still the right thing to do. And I'm kind of proud of our record. Not too many regrets, to be honest. Love to have been able to be delivering right now something which should have been delivering better. But I think that's only now a matter of time, and patience will be rewarded.
Well, Doug Ramshaw, John Black, thank you very much for joining us today, and thank you very much for our audience.
Thanks, Paul.
Great. Thanks, Paul. Good to see you, Doug.
Likewise.